Hey, I'm LaRosha. So let's talk about the AI stock market, because right now it is giving investors total whiplash. I mean, 1 minute it feels like we're staring at a massive bubble about to pop, and the very next, it looks like an earnings boom that just can't be stopped. So in this explainer, we're going to try and make sense of this whole crazy situation. All right, let's just get right to it. This is the big question, isn't it? AI bubble or boom? Is this whole thing just a massive hype-fueled bubble waiting to burst? Or is this a real, sustainable boom that's built on actual growth? Right now, the market is completely split down the middle, so we're going to look at both sides of the argument. Okay, so first, let's look at the case for a bubble. Not too long ago, a serious wave of fear just washed over the US markets, and I'm telling you, it was enough to rattle even the pros. And look, we're not talking about a little blip on the radar here. We saw major indexes, the S&P 500, the NASDAQ, they were down for 3 days straight. You could just feel the tension on Wall Street. The whole atmosphere was just extreme fear. And this chart, it just captures that panic perfectly. You see the VIX, which is basically the market's fear index. It shot up by a whopping 13%. At the exact same time, the CNN Fear and Greed Index just tanked, hitting its lowest level since April. I mean, when you see numbers like that, it's a crystal clear signal that there's some serious anxiety out there. And this wasn't just some vague feeling in the air. The big guns on Wall Street, we're talking Goldman Sachs, Morgan Stanley, they actually started putting out official warnings. They were basically saying, hey, this AI sector looks way overvalued, and they warned that tech stocks could be headed for a major correction. Think a drop of 10 to 20%. Yikes. So this is where a very famous and maybe a little ominous name pops into the story, Michael Burry. Now, if you've seen the movie The Big Short, you know exactly who this is. He's the guy who famously saw the 2008 financial crisis coming when pretty much nobody else did. And what he did next, well, it really tells you how concerned some people were. Burry revealed he was shorting NVIDIA. So what does that mean? It means he's making a massive financial bet that NVIDIA, the absolute titan of this AI boom, is about to see its stock price fall. And let me tell you, when Michael Burry bets against something, people pay attention. And just to add a little more fuel to this fire, there was this huge shift in what everyone expected the economy to do. See, hopes for an interest rate cut from the Fed in December, they just collapsed. A month ago, the market was pricing in a 90% chance of a cut. But today, that's plummeted all the way down to 40%. And why? Well, inflation is just being stubborn, and the economy is surprisingly strong, which makes a rate cut much less likely. So the stage was totally set for a big downturn, right? Fear was at its absolute peak. It really felt like that bubble narrative was about to become reality. But then, just when you thought you knew what was coming, everything changed, literally overnight. And what was the catalyst for this huge shift? You guessed it. NVIDIA. The company dropped its earnings report, and the revenue number was just staggering. $57 billion. A single number that completely flipped the script on that whole fear narrative. Just to put that in perspective for you, that's a 62% increase from the year before. This wasn't just a case of them beating expectations by a little bit. No, this was a massive, undeniable display of growth that just completely shattered all those worries about a slowdown in the AI industry. And this table just shows you that whiplash effect in action. Look at this. During the regular trading day, when everyone was acting on fear and uncertainty, the stock actually fell almost 3%. But then, after hours, once those incredible earnings numbers came out, it surged more than 3%. A total 180-degree turn, all because of the hard facts. So this really gets us to the heart of the matter, doesn't it? How can both of these things be true at the same time? How can you have this totally rational fear of a bubble and at the same time have these undeniable, record-shattering earnings? Well, it's really a tale of two completely different stories playing out at once. On one hand, you've got the fear narrative, and it's driven by real concerns, right? Overvaluation, economic uncertainty, all that stuff. But then, on the other hand, you have the cold, hard data, the fundamentals, that show record earnings and a really strong outlook for the future. And somehow, both of these things are true. And here's a really important distinction to make. In the US, the market is mostly worried about the profitability of AI software and chip design. That's kind of where all the bubble talk lives. But if you look at other markets, like in Korea, the focus is totally different. They're all about building the essential AI hardware, the memory chips, the physical stuff that you absolutely have to have for any of this to work. So, after all that chaos, what's the one thing you should really take away from this market roller coaster? What's the main lesson here? It really just boils down to a classic market battle: emotions versus evidence. That big drop we saw, that was all driven by uncertainty. People were selling because they were afraid of what might happen. But that rebound, that was driven by confirmed numbers. People started buying again based on what was proven to actually be happening.
And that really leaves us with this final thought. Look, the debate about whether AI software is going to be profitable, that's going to go on for a while. But one thing seems pretty certain. The physical infrastructure, the hardware that makes it all run, has to be built. So maybe the real question isn't if there's a boom, but where the surest bet is. Could it be that the real gold rush isn't in the AI software itself, but in selling the picks and shovels needed to build the whole thing?